As we are aware, in the case of finance lease, a lessor shall be recognizing a net investment in the lease. A question arises that whether this net investment in the lease, which is ultimately reported as an asset in the balance sheet, whether it will be remeasured. By remeasurement, we mean whether we shall be changing that particular amount. Now, that might be necessary if the lease is getting modified. So in this episode, we are going to discuss that how shall we account for lease modifications from the viewpoint of the lessor. We had seen a similar segment, but that was lease modifications for the lessee. In this episode, we will discuss how it shall be done for the lessor. So starting with that same thing, we are saying remeasurement of the net investment in the lease. They are saying after the lease commencement, the net investment in the lease is not remeasured. We never disturb the net investment in the lease. However, you will have to make changes if the lease is getting modified. The scope of the lease is changing. Maybe the scope is increasing or the scope is decreasing. Consideration might be changing. The lease term might be changing. So they are saying that the lease is modified, that is a change in the scope of the lease or the consideration for the lease that was not part of the original terms and conditions of the lease, and the modified lease is not accounted for as a separate contract, or the lease term is revised when there is a change in the non-cancelable period of the lease. So in any of these situations, you may have to carry out a remeasurement of the net investment in the lease. After all, net investment in the lease is a measurement for a particular period. So if the period is changing, naturally the amount of the net investment will change. Again, the net investment will depend upon the consideration. If the consideration is changing, then again the net investment in the lease will be changing. The net investment in lease will also depend upon the scope of the lease. So yes, if there are any modifications in the lease, there shall be corresponding change in the net investment in the lease. So let's see how a finance lease shall be modified. The initial portion is very much like what we had discussed it from the viewpoint of the lessee also. In the case of lessee, we had discussed that if the lease is getting modified, one possibility is that the lease modification will be treated as a separate lease. If the scope of the lease is increasing and the consideration is also increasing commensurate to the standalone price, we know that the modification should be treated as a separate lease. That same concept of lessee is also applicable to a lessor. So we say a lease modification is accounted for as a separate lease if both the conditions are satisfied. The modification increases the scope of the lease by adding the right to use one or more underlying assets, and the consideration for the lease increases by an amount commensurate with the standalone prices for the increase in the scope. Exactly what is there in the books of the lessee has been repeated even for the lessor. So if there is any modification of the lease, let's say you have leased out 1500 square feet right now, and that same lessee is demanding further area on rent. So 1500 square feet, the lessee wants another 1500 square feet. So the scope of the lease is increasing, and whatever is the going market rate, we are charging the same for the increased scope. In this case, the modification will be treated as a separate lease. Of course, if these conditions are not satisfied, then the modification is not a separate lease. Okay, then how shall we carry out the modification? Okay, they say, we are reading this, if a lease modification fails the test to be considered as a separate lease, then the lessor follows the following guidance. Okay, when a modification to the finance lease is not a separate lease, the lessor first assesses whether the lease classification would have been different if the modified terms had been effective at the inception date. The modification should not be such that the entire classification of the lease itself is changing. For example, when you signed the lease agreement, it was for the entire useful economic life of the asset. But then in between, the modifications are such that the lease is no longer covering the substantial portion, or we can say the major part of the useful economic life. In such a situation, this is no longer a finance lease. It has actually become an operating lease. So if the classification itself is changing, then how shall the modification effect be given? Just see. They say, if the lease would have been classified as an operating lease had the modified terms been effective at the inception, if the revised conditions were there right from the very beginning, then the classification would not have been finance lease. The classification would have been the operating lease. So what to do? Okay, it says account for the lease modification as the termination of the original lease. It's very natural. It is no longer a finance lease now. So we will consider that the finance lease has terminated, and now we will consider as if this new lease is an operating lease. And then they say creation of a new lease from the effective date of the modification, and measures the carrying amount of the underlying asset as the net investment in the original lease immediately before the effective date of the lease modification. Right? So earlier it was treated as a finance lease. So what happens in a finance lease is the main asset will be derecognized, and instead we are showing net investment in lease. Now you are saying this is no longer a finance lease. So net investment lease has to be removed, and instead of that, the main asset will be incorporated. For example, if it is an item of PPE, originally you signed for a finance lease. So item of PPE was removed from the books. So we said to PPE account, and the net investment in lease account was debited. Now it is no longer a finance lease. So net investment in lease, which is having a debit balance, it has to be credited now. And the item of PP that was originally derecognized has to be re-recognized. Now, if that item of PP is to be re-recognized, then I require the carrying amount. They are saying whatever is the balance in the net investment in lease, consider that as the initial carrying amount. So PP account will be debited and the net investment in lease will be credited. So they say measure the carrying amount of the underlying asset as the net investment in the original lease immediately before the effective date of the lease modification. So you must have observed one interesting thing. We are giving the effect prospectively. We are not doing any retrospective calculations over here. So that's what they are clarifying. The remeasurements above occur as of the effective date of the lease modification on a prospective basis. And finally, what if an operating lease is getting modified? Okay. A lessor shall account for a modification to an operating lease as a new lease from the effective date of the modification, considering any prepaid or accrued lease payments relating to the original lease as a part of the lease payments for the new lease. Whenever an operating lease is modified, it is always treated as a new lease, unless and until you come to the conclusion that the substance of the lease is remaining the same. If the substance of the lease is remaining the same, then actually it is not a modification at all. So when there is indeed a modification, consider the old operating lease to have been discontinued and consider as if it is a new lease. This new lease can be operating lease. This new lease can also be a finance lease. See, both the things are possible. Either the operating lease is getting modified, but it is still remaining an operating lease. Then consider the old operating lease to have been discontinued and a new operating lease entered into. Or the modifications can be such that it is no longer an operating lease and it has become a finance lease. Again, operating lease will be considered as if it has been terminated and a new lease has been entered, and this new lease will be freshly classified as a finance lease.